The first difference between Forex and stocks is liquidity. If you have been trading Forex for some time, you already know that Forex market is the most liquid market as compared to the stock market, futures market, stock exchanges combined. About 10 times more liquid than stocks, because if you've been watching my channel, you know that the Forex market trades about $5 trillion per day. Now, what's so good about high liquidity is that the higher the liquidity of the market, the higher the predictability. Less liquid as compared to the Forex markets. In other words, the stock market is more volatile as compared to the Forex markets, especially in the short term. Especially if you are investing into small cap stocks, you would have liquidity problems. Then a lot of people say, Karen, can I just invest in large cap stocks? The thing is, if you invest into large cap stocks, if you're just a beginner, you don't have a big sum of capital, you're gonna pay a high price of large cap stocks. But the good thing about large cap stock is that it is safer because you're buying a proven company with long history as compared to small cap stocks. But yet again, the good thing about small cap stock is that even though the company is small cap, but it has more potential for growth as compared to large cap stock. But then yet again, you also find once in a while large cap stock that have good opportunity to grow. So then again, it's like a trade-off. If you want some videos on this channel regarding stock investing, let me know. I'll do a video on that. Now here's the thing, I don't trade stocks, but I invest long-term in stocks. And if you trade Forex, your focus is a lot narrower as compared to stocks. Because when you trade Forex, you're only focusing on that few major pairs. Then of course, you can add a few minor pairs if you want. Exotic pairs, I wouldn't really touch it. The only time you should look at exotic pairs is when you're traveling to another country. You go to the money changer. Other times when I'm trading, major pairs, minor pairs. Especially if you're a beginner, please start with major pairs. Okay? When you trade and invest in the stock market, the S&P 500 index alone has 500 stocks. Imagine if you combine Nasdaq, Dow Jones. There are literally tens and thousands of stocks for you to choose from. But then again, nowadays there's a way to find out which stock gives you a good PE ratio, which stock gives you a good debt to equity ratio to invest into, which stock gives you a good liquidity ratio to invest into. That's a fast way to filter out everything, to remove the stocks that you're not looking for. So that's for another video probably. If you want it, just let me know down in the comment section below. And because with high liquidity, the impact of news on Forex market is relatively less as compared to the stock market. You realize that the stock market is easily impacted by the industrial news and also news related to the company. Correct? And if you are holding a full-time job, Forex market will be more suitable for you because especially if you are living in Asia, you can come home from work and still trade Forex because the Forex market is open 24/5. So if you tell me, Karen, I have no time to trade Forex, then when you come home from work from 5 p.m. all the way to 2 a.m. in the morning, what are you doing? Watching Netflix? Then of course, you don't have all the time in the world. When you come home and your laptop is still there, it did not burn, you have no excuses to not check and trade the Forex markets. You know what I'm saying? Because the stock market, if you are really trading, investing into it, you know how frustrating it is. Like today night, I want to buy a stock, but then when I wanted to buy it, I could not buy it at that moment. I need to wait until tomorrow. Because the stock market is only available for you to trade and invest during market opening hours. Now, even if you are not working full-time, you'll be like, Karen, I don't care. I'm just staying at home every single day. I don't need to work because I have rich parents. Even if this doesn't matter to you. When the market opens and closes before the day ends, and then opens tomorrow, in the stock market, very often you see the price goes like this. It closes at this level. Then the next day, it opens with a gap in between. This is what you call market gapping, meaning that if you set your stop loss in between this market gapping, when the price opens below your stop loss the next day, very likely your stop loss wouldn't be triggered. Would you like that? Would you like to wake up the next day with a surprise? As for the Forex markets, yes, it does happen once in a while, but it's very seldom, not as frequently as the stock market. The next thing is the cost of trading. When you're trading Forex, what you're paying is you're paying the spread for your trades. Of course, you come across once in a while, brokers will need you to pay commission, but most of the time, you only need to pay spread to your broker. For stocks, you need to pay commissions. In other words, it is more expensive as compared to Forex. When it comes to capital for Forex, I have seen brokers who offer $50, as low as $50. For stocks, on the other hand, if you're opening a margin account, minimum 2K. If you're trading with a discounted broker, you still need at least $500. But to be frank with you, $500, $50, you can't really earn anything. Remember when I said a small account is not for you to make good money, a small account is for you to practice trading, investing with real money. It's not for you to, oh, I can get rich quick. Why is this thinking so important? So that you don't over leverage just because the profits are small, you want to go it fast. Because a lot of beginners do that. They rush the whole entire process. This is how a lot of traders get burned. But if you only have a small capital to start with, you want to start really, really small, then Forex market would be for you. When it comes to leverage, the Forex market allows you to leverage a lot higher depending on your country, because on some countries, the maximum leverage is 1:50, especially for US. Some brokers, they offer you leverage of 1:400, which is not necessary, come on. But to put it simply, Forex gives you a high leverage as compared to stocks, which gives you a lower leverage as compared to Forex. And final thing, because the Forex market is so liquid, it is very likely that somebody with a deep pocket can manipulate the market. I'm not saying all the time that it cannot be manipulated. So Forex market, you seldom see market manipulation. Whereas for stocks, it can easily be moved by people with deep pockets, alright, with big money. So that's why sometimes you see some analysts, some brokers, they recommend you a good stock, but then behind the scenes, they're actually selling it. So that when all the greedy investors, amateur investors buy into that stock that they recommend is good, they can profit from it. On a side note, I've done a full-page report to study analysts. In fact, a study analyst report, when I was studying my finance degree, in summary, most of the time, analyst recommendation doesn't work out. Because of many reasons. One of the reasons, which is conflict of interest. And also when they're telling you to buy that one stock, they never tell you that they're selling another asset class to hedge against that position. Now you know, alright? In other words, don't just blindly listen to analyst recommendation. You must do your research first. If your proven research says buy, some random people are telling you to sell, just stick with your position. Just stick with it. Should you invest into stocks or trade Forex? At the end of the day, it still comes down to many different things. Depends on your financial goals. If you are looking for short-term withdrawal of your cash, if you need the money now, not 10 years later, not 20 years later, then Forex is something for you. And if you also love technical analysis more, then reading balance sheets, cash flow statement, income statement, you want to vomit when people talk about liquidity ratio, quick ratio, sharp ratio, beta, alpha, then stick with Forex. If you want to save and grow your funds for retirement, then you can afford to invest long-term, wait long-term, and then go into stocks. Because you don't need that money now, you can afford to put it one side, let it grow for 5 years, 10 years, 20 years time. And also if you love looking at numbers, you love to study accounting when you are at school, stocks would be for you. But of course, if you are a stock trader, then you also need to rely on technical analysis. In fact, when you are a stock trader, you don't really need to look at the long-term intrinsic value of the company. You rely mostly on technical analysis. So then again, you need to compare, should I invest into stocks or should I trade stocks? It all comes down to you. Personally, because I love finance, I love the financial markets, it's my passion. Just like how people love cooking, love drawing, I love the financial markets. That's why I do both. In fact, I do a lot more than this. If you want me to share more, let me know down in the comment section too. Final question for you. Are you now trading Forex? Or are you now investing or trading into stocks? Let me know which one do you prefer and why. Okay, so with that, hopefully you like this video. I'm Karen and I'll talk to you in the next episode. Bye.